Yo, let's dive into this killer strategy that's been the most accurate one I've come across all year. It's a twist on the classic MACD using a beefed up version called the standardized MACD. I'm pumped to walk you through the indicators, entry and exit rules, and how to set it all up. Let's jump in. First, we need to add the star of the show, the standardized MACD. Head to TradingView, pull up any asset you're into. I'm going with GBP USD on the 15-minute chart. Click the Indicators tab, search for a standardized MACD Heikin-Ashi transformed by this amazing author. Big shout out to him, her, or them, by the way, and add it. This indicator is set up from the old school MACD, giving a sharper, more consistent read on market momentum across different assets and time frames. It uses Heikin-Ashi candles for smoother trend visuals and better reversal signals. So, what's this thing made of? You've got an upper red overbought level and a lower blue oversold level. Like the classic MACD, it's a signal line, that white line cutting through the window, and the MACD line, shown as Heikin-Ashi candles. Crossovers between these are your buy and sell signals. When the Heikin-Ashi candles cross above the signal line, it's a green light for long trades. When they cross below, it's a cue for shorts. Then there's the MACD histogram and the white midline. Above it means bullish momentum, below it means bearish. You'll also see red downward arrows when the MACD line hits the overbought zone and blue upward arrows when it is oversold, flagging potential entry points. Let's compare it to the traditional MACD by adding that too. The difference is, the standardized MACD has those overbought oversold levels, Heikin-Ashi candles instead of a regular MACD line, and those handy arrows. Otherwise, they're pretty similar. The Heikin-Ashi candles smooth out trends and reversals, and the plus-minus 100 levels let you spot overbought oversold conditions. For example, when the MACD line hit the overbought zone, a red arrow signaled a short entry. Later, an oversold dip triggered a blue arrow for a long trade that would have banked profit. Before we talk settings, I want to introduce you to my trading family at Bybit, and to do that, I'm handing over to my dear friend, Michael.
Welcome aboard our crypto arc where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Established in 2018, Bybit is one of the fastest growing cryptocurrency exchanges committed to providing a professional, smart, and innovative trading experience. Join Bybit today and ride the wave of crypto success.
Now, for the standardized MACD settings, double-click it, go to the Inputs tab, set bar coloring to signal line crossovers, to color bars based on MACD/signal line crosses, and choose the MACD display mode to hide the histogram. We don't need it. Click OK. Next, add 2 more indicators, and don't sweat it. I know you might be scratching your head and telling yourself, oh, I'm using the free plan of TradingView and I'm not able to choose more than 2 indicators, but you can, my friend. Just make sure to watch the entire tutorial until the end, because just before the end of it, I will show you a TradingView hack, not only one, let's say 2 of them, to use more than just 2 indicators on the free plan. Search for EMA Trend Cloud and support and resistance with breaks. For the EMA Trend Cloud, set the slow EMA to 200. Keep the fast EMA at 50 and click OK. Leave the break and retest indicator on default settings. Here's how these 3 work together. The standardized MACD gives buy-sell signals via Heikin-Ashi signal line crossovers. The EMA Trend Cloud confirms bullish, green cloud, or bearish, let's say red cloud, trends to keep us trading with the market's flow. The break and retest indicator spots support resistance breaks and retests. For a long trade, first, the Heikin-Ashi candles need to cross above the signal line below the midline. Check the candles turning blue from red to confirm. Second, the EMA trend cloud must be green, signaling a bullish trend. Third, the price should break and retest the recent resistance level, shown as a dotted line by the break and retest indicator. For example, a break label appears when price cracks resistance, followed by a retest label, delayed one candle, so that's your entry. Most crucially, from the crossover to the entry candle, all candles must stay blue, no red allowed, or the trade's invalid. Enter long, set the stop loss a few pips below the retest candle, and target a 2-to-1 take profit. That trade hit. For a short trade, flip it. Heikin-Ashi candles cross below the signal line above the midline. Let's say candles turn red from blue. The EMA trend cloud must be red for a bearish trend. Price needs to break and retest the support level. Let's say dotted line with break and retest labels. All candles from crossover to entry must stay red, no blue, or it's a no-go. Enter short, stop a few pips above the retest candle, 2-to-1 take profit. Let it ride. That one nailed it too. In short, the standardized MACD upgrades the classic with the smoother Heikin-Ashi visuals and clear overbought oversold levels, making it a solid tool across assets and timeframes. Paired with the EMA trend cloud and break and retest indicators, it's a powerhouse. This isn't financial advice. Backtest and forward is before risking real money. And as I promised earlier, and of course I'm a man of my word, check out the recommended videos on your screen. The two top ones on the left and right are the videos which are TradingView hacks, which allows you to use more than just 2 indicators on the free plan of TradingView. And also check out the recommended playlist and the other video to learn how to make any trading strategy into a bot with alerts, including this one, all for free, so it does a job for you while you're not around. Plus more. That's it for this video. If you got value, smash that like button and subscribe. Thanks for watching. Catch you next time.